Hello everyone, it's Ethan Garland here from Millionaire Mindset, and today it's a difficult video to make because we're going to talk about losing accounts, blowing accounts, losing funded challenges, how I deal with those emotions, and yeah, it's true guys. I did blow that My Forex Funds 200k evaluation. All right, that 200k evaluation was on phase 2. And I did unfortunately violate the daily drawdown rules. Now, how did I manage to do this? I'm going to go into detail on how this happened and why it's actually sort of part of the plan. So if you guys have watched my video that I made previously on risk management and how I plan to scale my funding, okay, I'm already sitting at about 7 figures in funding. However, this is what I would do today if I were to scale. And like you guys will see, I was very aggressive with this account. Like I say, it's all part of the plan. So if you guys check out the video, put it somewhere here, you'll be able to see that I am aggressive when it comes to certain accounts, and then I have other accounts that are less aggressive. So we'll chat about that as well. So what I'm going to do, guys, is show you exactly sort of what my risk management plan is when I am trying to do funding challenges and how it can lead to blowing your accounts. However, like I've stated in my other videos, I have backup plans, and I'm not actually losing money when I lose these accounts. So I'll go over all of that with you in this video, and I'll show you guys how it actually isn't necessarily a bad thing to lose accounts when it's part of the plan. There's always aggressive accounts and there are less aggressive accounts. And if you continue with that plan, you have to understand that aggressive accounts are likely to be lost at some point. However, they will yield you more profit and you will be able to acquire more of them without as much waiting. And that is the entire premise of my risk management strategy. So I'm going to explain it to you guys in this video. So let's jump in and I'll show you exactly what I mean. Like I said before, I've got low risk accounts and I've got high risk accounts. Okay, so we'll have my low risk accounts here. Let's make it a little bigger. And we've got high risk accounts. Okay, so my low risk accounts, I'm risking anywhere, generally 0.25%, okay? And when I start out with low risk accounts, it's usually 0.5%. But as I've acquired more, I have stuck with these kinds of numbers when I'm risking on my low risk accounts. And what this means is psychologically, I'm not worried, because if I have a losing streak like I did last week, it's not a big deal, because if I blow an account, I've still got these accounts. They won't blow, because some of them are in fact literally risking 0.25. I'll have to lose 40 trades in order to lose the account, or 20 trades if I'm risking 0.5. And so I usually come out every month with a profit, a net profit, which is where this account's purpose comes in, which is to bring in a small net profit every month reliably so that I can fund these high risk accounts, which will sometimes maybe not even blow, but will end with me in either a large profit, okay, a very large profit, which is 10% plus, or passing evaluations, or in this case, it ends up in violating one of the rules, which I unfortunately did in this case. So what these high risk accounts allow me to do is pass new evaluations, okay, whether it be evaluations that I'm intending to use for low risk accounts or for high risk accounts. Generally, I have more high risk accounts than I do low risk accounts. Okay, and then I have sort of medium risk accounts as well. So the way I put it, the more capital I have, the lower risk I put in. So at the moment with high risk accounts, okay, with high risk accounts, I am using a lower risk. So my high risk is classified as 1% on high risk accounts, and that's with live funded accounts. Okay, so let's say these are live high risk accounts. Okay, so funded accounts. And then we've got evaluation accounts, which are also classified as high risk. Okay, so evaluation. Okay, let's make it blue. Okay. So with these accounts here, we are risking between 1 to 2%. Now this lowers, the more capital I have, the lower the risk. Okay, the same with this as well. Low risk accounts, the more capital I have, the lower I risk. So currently I'm in the lower risk because I have more capital, whereas my high risk live accounts, let's just make it clear, funded live accounts, they are sitting at the 1% mark. And so what this meant was that last week I was not struggling very much with drawdown. I've now managed to recover these accounts from that losing streak that I had last week. And evaluation accounts, that's a whole different story. So when I begin an evaluation account, I start by risking 2%, and this doesn't change because an evaluation is always the same. Evaluation is always an evaluation, right? So this does not change. 2% always is what we start with, okay? And then, guys, depending on the next trade, okay, so if we have a losing trade, I will then hop into 3%, okay? And that will then help me to pass, because I'm always looking for between 1 to maybe 2 risk reward, at least generally about 2.5 risk reward. Okay, so once I go and I win the first trade, I will then go to 3% for the next trade. However, if I lose the first trade at 2%, I will then go and risk 3% for the next trade, and that is to recover this trade. Now, what happened in my case, I lost the first trade, lost the second trade, and then we came to the third trade. Now, the third trade, I risked 4%, okay? And the reason I can do this again is because My Forex Funds allows for us to have a risk of 12% overall. And these were trades executed on different days, okay? So what happened now is I risked 4%, which again, yes, high risk. It's the highest risk of these three. So we've got very low risk, moderate risk for our live, higher risk accounts, okay? And then we've got evaluations, which are extremely high risk. Now, bear in mind, guys, I passed in 3 days on phase 1 with this evaluation strategy, okay? So this 4% would have fixed me up on both of these. So bearing in mind, I'm 5% down. I've risked 4%. I'm aiming to get back into profit. If this trade worked, okay, I would have been back in a significant amount of profit. However, it did not work. And what I failed to calculate correctly was my risk. So with the 4% came commissions, okay? It came with your spread, okay? So it had all of those included. And so what happened was, with commission, spread, as well as slippage, okay, I unfortunately ended up violating the 5% on this trade. And so I then unfortunately lost the account. So here's why I'm actually not upset. Why? Because once this happens and we lose this account, we simply go back here. And so what's happened now is that I've now recovered these accounts. I've recovered these accounts because of my risk management strategy on these two accounts, which are a lot less aggressive and allow me to have a lot more drawdown and a lot more losing trades, whereas these, not so much, because I'm extremely high risk. So what happens is I simply go back and start all over again. And what this allows me, guys, to do is to pass evaluations almost every 2 weeks, and this allows me to scale my capital a lot faster, okay? And that's basically my cycle of events. I use these low risk accounts, okay, to fund my evaluations, okay? I then go aggressive on these evaluations. I then try and pass them within a week to 2 weeks, okay? If I'm too aggressive and I fail, not a big deal. I simply go back to phase 1, take from my low risk accounts, which I can generally withdraw from every 2 weeks, which allows me to get new accounts every 2 weeks. And then I simply bank from these accounts, which are medium risk, okay? And anything that's extra here, I will also bank, okay? And this is how I scale my accounts, guys. And so with this being said, I'm going to be starting a new funded challenge of $200,000. And what makes this even more exciting, guys, is that I am going to be starting with a brand new company, okay, which I will be announcing in tomorrow's video. They are a very exciting company and have a lot of exciting new rules that make it a lot easier to get funded. I'm going to go over all their rules and why I chose them as my new prop firm to do the evaluation with and to get funded with. And we're going to go through all of that in tomorrow's video. But the overall reason I did today's video was to show you guys that you can be aggressive, okay, and risk these big amounts, but still be sensible and have a backup to continue to fund your account expanding and still make decent amounts of money in the medium risk category as well. Okay, so that's it for me today, guys. Thank you so much for watching. I hope you guys took value from this. If you did, please make sure to subscribe and follow down below. All right, guys, I will see you in the next video. Cheers.